The Dow joining the S&P 500 in negative territory Thursday after earlier hitting a record high. The Nasdaq inching up just 0.1%. A lot of small moves. Let's get inside the markets with Art Hogan of National Securities. Art, good afternoon. Good seeing you again.
Good afternoon. Good to see you too.
So, Art, we've seen small little moves by the market the past few days, including today, although it's been a little choppy. Is this loss of momentum possibly indicative of a market top?
No, I don't think so. You know, it's interesting. Go back 2 weeks ago, we lost 3%. Go back to last week, we gained 3%. I think we're digesting the catalyst in the market right now, and I think that's a very healthy thing to do. So we've had some volatility, and now we have some calm. I think the calm is okay. I think the three main drivers would get better news on both virus and vaccine. So virus counts coming down, vaccine counts going up. That's good news. I think the earnings reporting season was much better than anticipated, and estimates for 21 are going higher. That's very good. And in general, it feels as though we'll be able to get fiscal stimulus out of Washington at some juncture. And all three of those are powerful tailwinds, but largely priced in at this juncture unless and until we see the fiscal stimulus. So I think we're taking a pause here. We're seeing some sector rotation, which also is healthy. But I think we're at a place where we're digesting some of the volatility we saw over the last 2 weeks. And I don't think it's indicative of anything but natural market momentum.
And since you mentioned the fiscal stimulus, we have weekly jobless claims falling less than expected to 793,000 last week. What does that say to you about the nature of the labor market recovery and the prospects for a big fiscal stimulus package?
Well, I can tell you this, there is plenty of evidence in the jobs market that we need more stimulus right now. So the weekly jobless claims and the continuing claims continue to point to a very large portion of the population that is still on unemployment. And if you combine that with the gig economy unemployment numbers and the folks that are applying for that federal program, so we approximate that about half of the people that lost their jobs at the beginning of the pandemic are still out of work. That is something the Fed is keyed in on. I think that the one mandate that the Fed is looking for in terms of monetary policy and the need for fiscal stimulus is we need to get more people back to work. So I think right now the economic data is matching up with what we'd like to see come out of Congress, and that's more stimulus, and it's likely to enter into our reality in the first part of March.
And Art, looking back at the markets, pot stocks, Tilray and Afria plummeting today after soaring yesterday after they were mentioned on several of those Reddit posts. Is this time to get into pot stocks and bet on that Biden will decriminalize marijuana?
Well, I'm glad you asked the question just that way. So it's interesting that when we think about thematics, whether it's legalization of marijuana or the broad acceptance of electronic vehicles or any of the themes, clean technology, any of those themes that we think about as connecting to the Biden administration, and then actually thinking about the fundamentals of how long this will take and what should we do about it. So I think in all three of those, whether it's clean technology, electronic vehicles, or cannabis, I think the theme is likely correct, but I think how it's manifesting and expressing itself in the market is likely ahead of itself. I think there's a lot of pockets of irrational exuberance in electronic vehicles right now. I think that they're the future, but they're not the today, and it's going to take a long time for them to be the mainstream. I think if you want to bet on cannabis being legalized in the United States, why would you buy a Canadian company necessarily? And the very important thing to think about cannabis investing is that after this gets legalized and there's listed American companies that are in this business, at some point in time, cannabis becomes a commodity like corn and soybeans and the rest of the commodity complex and the agriculture complex. And you're going to want to own those companies that have that value proposition on top of just the commodity. So be careful in investing in this and make sure you're investing in, if your theme is legalization in the United States, you want to bet on U.S. companies, and there's just no plays right now.
Okay, look at the citizenship. And lastly, Bitcoin. Bitcoin is rising today. You got MasterCard planning to offer support for some cryptocurrencies. Now, Bank of New York Mellon, the oldest bank in America, saying that it's set up a unit to help customers hold digital currency. So are we seeing this, the mainstreaming of Bitcoin, and does that mean that there's a place for it in an investor's portfolio?
Well, the difficulty in putting it in an investor's portfolio, if you were my client right now, I can't help you with that. It's an individual decision that you have to make, and unless you buy some of the ETFs that are involved in cryptocurrencies in general, and that is difficult. But in terms of the cryptocurrencies in general, I think what has happened is, so in 2017, we saw a $500 to $20,000 move in Bitcoin that got washed out pretty quickly after that. And again, this year, that resurgence in 2020, we saw the same type of move where we went from about 3,000 back up to 20,000, now up to 40,000. This move feels different because it feels like there's more institutional support. I think a lot of that started with PayPal. And one at a time, companies are saying, if there's a demand for this, we're going to have to provide the services. So I think the institutional reality has settled in that cryptocurrency is probably here to stay in some form or another. And I think that that is being justified by the fact that a lot of well-known institutions are saying, if you need help with it, we're going to help you. Here's the part that we're going to play. Again, like anything that goes up this fast, this quickly, be careful on your entry points here. Because remember, in 2017, which was only 3 years ago, it went from $500 to $20,000 and all the way back down to $1,000 again. We could see that kind of volatility again. So this is not for the faint of heart, but I just think this rally is more justified by the institutional involvement.
Our thanks to Art Hogan of National Securities. I'm Fred Katayama in New York. This is Reuters.